guys and gals. I got a couple I got a couple quick questions I need to address really fast. So Amanda asks, "Good afternoon. All two things I don't understand is why yen is so weak in light of all the Chinese woes, and secondly, is that an inverse head and shoulder pattern on the daily cable?" Well, we'll talk about the cable here in a second. By the way, I am short the pound. It's a thorn in my side right now because I'm on my cost average. I'm actually down 90 pips. I really don't mind being short the cable, but I am a little concerned on the rally that we've had over the last couple of days, but I'll go over to that in here in a minute. But when you talk about the yen, why do you think the yen is so weak right now? Why do you think it's weak, the yen? It's weak because China is actively devaluing its currency against the dollar. So if you look at the U.S. dollar CNH, okay, here, this is what the USD CN, let's see, it's this one right here, CNH. That's not the one I want. USD CN, I'm going to get you a little bit bigger. I don't want the FXCM one. I don't think this fixing rate, no, that's not it. Dang it, USD CNH. Which is the one that I just pulled up that gave me more. There we go. Here it is. So you can see that's the biggest move that we've seen since in one day, and this is a weekly chart, since 1994. So when you're asking why the dollar yen is so strong, well, imagine the Chinese renminbi is going down. The yuan or the yen is going to be going down. You go to USD SGD. You look at the Singapore dollar, and I haven't even looked at it this morning, but look at how strong that is. It's going to strengthen. It's putting a bid underneath the dollar against every Asian currency. Okay, so and then on top of that, Japan may probably do more quantitative easing to weaken their currency, and probably what happened overnight in China is just going to provoke them even more going into the end of this year, because we already expected the BOJ, September or October to unleash another round of quantitative easing. Well, because of what China has done overnight, that almost guarantees that we're going to get it out of the BOJ here in the next couple of months. Okay, now one other question I need to address before I go here, and for those of you that are new to the Morning Edge, you guys know I don't pitch products, and I don't. One of the benefits of listening here for free for a couple hours is that I won't sit here and go, oh, be a Wise Trade member and it costs $150 a month and blah blah blah. I don't. Most of you don't even know how to jump into our chat rooms. You may listen here for 3 months and not even know. You're like, you keep talking about this chat room. How do I get in there? And I won't even tell you, because I don't feel that. I feel if you really want to find me, you can come find me. But I got asked this question from Steven, and Steven asked, "Hey Blake, I like the way you are trading. Is there a way to learn it? Scale in and out into positions." I did a video that's available in our home office. It's $30. It's much cheaper than buying a book, but I did it a couple Christmases ago because out of requests from many of our listeners for a number of years asked, "Hey Blake, can you do a video on how you trade?" And what we do is we made a video. We charge for it because we pay for we house it on our servers. So this way you can view it as often as you want, as many times as you want, but we keep it on our servers as our proprietary education. So if you were interested in that video, like I said, it's $30. It's so cheap. It's cheaper than it's better than buying a book, in my opinion. You just have a video and you can watch it and fast forward through it as much as you want. There's a couple of different strategies. One of them is called the Fibonacci fade, and it really kind of outlines how I enter the market when I'm scaling in. And so if you're ever interested in that, just email me. you can just email me at bmorrow@wisetrade.com. I'll hook you up with the people in the office, and they'll tell you how to get that video. It's very, very I think you'll like it. Most people, actually, I haven't met one person yet over the last couple years that haven't really enjoyed that video. That's probably a fan favorite. Okay, now with that being said, you won't hear any more about it. Let's get started with analysis. So let's go into the charts. We've got a lot of analysis to do, very short time to do it. And I want to make sure that we get it all this done this morning, so I can answer more of your questions. We got like a lot of cross rates we need to cover and whatnot. Okay, so let's talk about the euro. So the euro dollar, and I don't have any position in the euro right now, although I am strongly considering shorting the euro. Now, if you don't know why, just go out to the daily chart. Okay, well, actually 4 hours probably the best view here. If you want to see the 4-hour chart and know where we're at, we are in a tight consolidation in the euro. You can see it right here. Right, this is a 4-hour chart, and you can see right where we're at. And I'm going to delete that, but I'm going to do it here in just a second. Redraw it here in just a second. So if you take, no matter what trend line you use, whether you're using this trend line or that trend line, we're up against pretty key resistance, anywhere between where we're currently at and up to 110.70. Now, this is a fairly tight consolidation, and you can see in the 4-hour chart, you can take that very low from 105 or wherever it is, 104 change, all the way through the lows. There's support here. And you take it through the highs, and we're depending on how this is more symmetrical, this triangle. This one just goes from the actual highs that we posted back in June. That takes us to right where we're at. So I don't know which one's right. I don't know what the market's looking at. All I know is somewhere around here, so let me grab a highlighter, somewhere around here we're coming into some pretty key resistance. I'm very tempted at this moment to actually short the euro dollar. I might actually here in a few moments. I might actually short the euro. I just haven't done so yet. One of the hesitations that I have about the euro, though, is if you look at like the euro Swiss, I think this is such a mega squeeze, and I'm long the euro Swiss, by the way. I'm up 229 pips in my position, but I think this is such a huge squeeze that it makes me a little nervous shorting the euro dollar, if that makes any sense to you. All right, so, but I'm probably going to do it. Matter of fact, I might even do it. I might even start here in a second. Matter of fact, I think I'll start right now. So I'm going to short a little bit right now here, and then I'm going to add to it on a move up to 110.70. So I just shorted a little bit at 44, okay? And like I said, if we get a spike up into 110.70, I'm going to add to it, okay? But what you'll notice here is we're coming into a 786 retracement, which is at 110.70. So I think that this is, or maybe it was 110.60. This 110.60, 110.70 is going to be really a key resistance. You know why I said 110.70? It's because there we go. So either or, regardless, 110.60, 110.70, it's going to be resistance. So I'll write down 110.70, and I think this is going to be big resistance. We could spike above it just to weed out some stops, but I believe that we are in a range environment at this point, okay? So 110.70. Now, where's support in the euro? Because what I had written overnight was this, and we actually blew past it and then bounced, so you can see how significant this was. I had support written down at, I think I had it 109.90. No, you know what? I think I had it written a little lower that. But anyway, we blew past it, so it's really not that significant. What'll be important, let me grab the segment here. So what will be important is going to be this obviously this overnight low, okay, and that comes in around 109. 60. So 109.60 is going to be support. We are in a range environment. Okay. Let's go take a look at the cable. Now I am short the cable. Not happy about it, but I'm not adding to it either. You can see we're knocking our head up against upside resistance here. And if you guys want to get short the cable, this is probably not a bad place to be on the short side. I should be adding to my position right now, but I'm not, I want to make sure there's more of a turn coming. So in other words, I'd like to add it on if we drop back below 155.50. As you can see, this yesterday should have held us as resistance, but because the dollar got whacked yesterday, we rallied right through it. But it should act as support. It did. You can see how we came right back down. This 155.50 did act as support. We are tightening in a range here. I still believe below that yellow line is going to be a very big deal if we get below there. All right, but you can see this is not. We're congregating around the 618, but I'm going to remove that. And what we might be doing is tightening in a range very similar to the euro dollar. And we have a downtrend line that comes into play. So that resistance at 156.20 is resistance. And I sent that out to our traders yesterday. So here, this is the chart that I sent out yesterday afternoon, so you can kind of see it. Give me a second, I'll show you exactly where it is. I gotta show you guys another. I gotta show you another picture. Give me a second. I'll show it to you. So I sent out this to our traders yesterday. You can see this is the pound dollar, and you can see we're rallying right into resistance at 156.10. And so I sent that out to our traders yesterday. We were coming up there. And 156.20 is really going to be a big deal, and I think it's a big deal today too. So I have to show you another video or another picture when we have a chance. I'll have to show you. It just reminded me yesterday. Okay, so here's the range, or I'm sorry, that's the resistance. Let's go figure out where support is. So support. And let me get rid of this one. Support's going to be pretty key from spike low, spike low, spike low. You know, kind of went through there, but really any move to 155.50 should be supported. Now, if we drop below there, below 155.50, that is, in my opinion, is where that's where I might start adding to my cable shorts, is a move below 155.50. So if we get back below there, what I think we'll do is I think we're going to come back down and test this yellow trend line, which I think is ultimately very important for bulls. I still believe that last week was very pound negative. The news out of the Super Thursday news, the Super Thursday, and you can see we sold off. We came back and completely closed any gap or any price discrepancy that we had following that Thursday news. We filled it. So we're very much back to neutral here on the cable. But I want to make sure we get back below 155.50 before adding to my shorts, me personally. So, okay. Let's go over to the Swissy. So the Swissy, despite all this dollar weakness that we've seen, do you guys see how strong the Swissy is still? Look at how strong the Swissy is. Now we did hit, and I should have taken some profits yesterday. It's always shoulda, woulda, coulda. I mean, you can't live your life as a trader on shoulda, woulda, coulda. So obviously I had orders to sell at 98.90. I canceled them. We went as high yesterday as 98.89. And I was thinking, after the fact, obviously, I'm like, maybe I should have taken some profits there. But in all actuality, if you look at the US dollar Swiss franc right now, it's strong. It's strong. So what happens what happens if the euro, let's say I'm right, okay, about the euro. I shorted it here at 110.44. Let's say I'm right and the euro dips back to 110 or 109.50. What do you think happens with the Swissy? Well, since it didn't go down, if it doesn't go down, usually there's only one other direction to go up or go. If it doesn't go down, it would be up, right? So, the risks are very high that if the euro pulls back, the Swissy is going to rip through 99 cents. And I'm going to tell you right now, if the Swissy breaks 99 cents, I'm going to go 0.9900. I'm going to put 3 asterisks there. Why? Because I put asterisks when I think it's very important. Now, if the dollar Swiss breaks 99 cents, let me show you how important it is. First of all, let's go to the weekly chart. Let's go ahead and zoom all the way out to 2001. So you go from 2000, 2001, you take that trend line, comes all the way down, hits the peak that we hit post Swiss National Bank, right? I mean, pre-Swiss National Bank. So we hit a high. Swiss National Bank moved, right? They moved and dropped the floor on the Euro Swiss. Obviously, the dollar Swiss gets crushed. We bounce all the way back. Now, when we bounce back, we stop. And so we stop, and that just happened to coincide with 2001 to 2015, then another peak, then where we're at right now. If we break 99 cents, in my opinion, in the dollar Swiss, we should at least break 102.50, if not go further than that, okay? In my opinion. But 99 cents is big resistance. It's huge resistance. It's massive resistance. And we're not too far away from it. Now, you can also play devil's advocate right now and say, Blake, this dollar is going down. The Fed's never going to raise rates. They're not raising rates in 2015. They're not going to raise rates in 2016. I'm shorting the dollar. If that's your attitude and that's what you want to do, so be it. Actually, the dollar Swiss is a great short as long as it's below 99 cents. But I'm telling you right now, if it breaks above 99 cents and you're on the short side, you will pay the piper. And it will be probably a fairly aggressive move. So, but it's very manageable risk. If you wanted to short any dollar right now, the dollar Swiss is giving you an opportunity to do it with managed risk. Now, obviously, I'm long, and my cost average is from 150 pips ago, so I'm obviously not going to take that trade right now. And personally, I think it's going a lot higher. You guys know the reasons why I'm bearish the Swiss. I actually bought the Canadian Swiss this morning just to let you guys know. I bought it only 6 pips ago. I'm in a small position. I'm starting to get my way into the Canadian Swiss, but I believe these Swiss pairs are going to break. And so I'm going to tell you right now, if it breaks above 99 cents, the last place you're going to want to be is short the dollar Swiss. Now, I still believe that there is going to be support down here on any move to 98 cents. You can see we're horizontally, we're being supported pretty well. Any spike down there, we're finding buyers. So I'll just write down 98 cents. Not great support, but if we get dipped down there, there are buyers. Okay, let's go over to the yen. So as we were talking a little bit earlier, one of the things about the dollar yen is the dollar yen is stronger because of the moves out of China overnight. So here's the thing: if we break through 125 to the upside, I'm not, aside from the Swiss yen, which I am short the Swiss yen, and that's not a product of being long yen. I'm just more short Swiss currencies right now. But I wouldn't be short any yen pair, like I said, aside from the Swiss yen, which is, I'm treating it a little differently. Like Euro yen, Aussie yen, I would be very careful being on the short side of those if the dollar yen breaks 125. Okay, 124, 125 is still our range. Support 124, 125 is uh, it's key resistance. I'm going to write down it's key because we're getting close to it. If unit labor costs come in strong, shows us that again, unit labor cost, the cost of labor is going higher. Wage inflation is going to start to rise. The cost of paying people to do work is rising. That is all very dollar positive. So if unit labor costs go up today, whoops, I meant to put range, sorry. Um, maybe that's a catalyst that it could be a catalyst that drives the dollar yen above 125 because we're so close. Okay. So just keep in mind if it breaks above 125, and it may provoke a lot of dollar buying across the board too. That's another thing that could happen if the dollar yen breaks out. All right. When I come back, we're going to do the Canadian. Obviously, we got a lot to talk about regarding the Canadian. We'll do the Aussie Kiwi dollar index, Swedish krona, Norwegian krona, everything else. So don't go anywhere. I'll be back in a few moments. Thanks, everybody. And thanks, everybody, for those retweets. Really appreciate that. Bob, Marie, uh, Mental, thank you very much. Rob, Kevin, Patrick H, Munster, thank you very much for retweeting that. All right, be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Sorry, I had to go run and grab some coffee myself. Excuse me really quick. I just had to go get some. I'm running on fumes over here, it seems like, but we got so much stuff to do. So let's go over to the Canadian. So talk about some crazy, crazy price action. I didn't realize how wild the price action in the dollar Canadian was overnight until Paulie said something. I mean, I hadn't even looked at the charts. I was just busy kind of getting caught up on everything. There's only so much I can do when I, get up at 2:45. I have to start broadcasting an hour and 15 minutes later. And I'm sending out an alert to our customers, and there's only so much I can do to before I can, really see everything. And so I hadn't even had an opportunity to see the dollar Canadian and how crazy it was. But what I did know yesterday is that between the non-farm payroll move, okay, we hit the 127% extension yesterday, and that's why I actually added to my dollar Canadian. So if you missed it and you came in a little bit late yesterday or today, you missed me saying that I actually bought the dollar Canadian. Well, I didn't get an opportunity to buy it here, thank God. I consider myself a little lucky that I actually ended up buying some here. I added a lot down here, like 130.10 or whatever, somewhere down in this neighborhood. My average was like at 40. I got out of it yesterday evening, not even knowing what happened in China last night because I was on the road and kids' school and everything else. I got out like right here at 78 or 80 right here. Took a little bit of profit, nothing exciting. I didn't realize we dropped all the way back down to 130 and then bounced. So I guess because what we've done, and you can see how we've now, all these spike lows, you see how they're higher lows, okay? So that means we really have to respect the 130 level. We really do. I mean, if you're on the short side of the dollar Canadian, you just have to realize that while we're above 129.90, you have to be really careful being short the Canadian. Obviously, there is, there's news out of OPEC overnight saying that their output is a 3-year high, even as Iran, continues to pump. So that is supporting weaker crude, which in turn is keeping the dollar Canadian fairly well bid. So 129.90 is support. Now I'm going to remove this, and you already see why it's big support. There's 127% extension. Okay, let's remove that now. Now let's figure out why this is resistance. So if you take the high to the low, okay, 618 at 131 is capping. So this should cap prices. If we get above it, that's going to be pretty bullish because that's going to start squeezing anybody who's short. So 129.90 to 131.10, that's our range. That's what we're dealing with right now. So 129.90 and 131.10, right? I still think the dollar Canadian is bullish. Okay, it is still hanging out, hanging strong. And remember, this red line is very important. Actually, what I'm going to do is I'm going to make this a red dotted line or dashed line, and so we know that that is a very important level. Why? Because that is the multi-year highs back from 2009. Okay, so we always know where that is. Okay, it's a very, very important price point in the dollar Canadian, especially on a weekly closing basis. I mean, we like yesterday we dipped below. Obviously, we may dip below from time to time, but the fact for me is if we close the week, since we're looking at such a long-term chart, if we close the week above 130.70, like where we're at right now, it's still bullish. So that doesn't just derail the bullish sentiment in the dollar Canadian. All right, let's go over to the New Zealand dollar. So the New Zealand dollar, really big support down here. Now, obviously the Kiwi got bent over last night due to the news out of China that took everybody back. I mean, I think I have to admit, myself included, I'm looking for a commodity currency bottom somewhere around here. Now, that doesn't necessarily mean 75 cents for the Kiwi. It could be as low as, or excuse me, 65 cents. It could be as low as 64 cents, okay, that we find support. But I am expecting us to find some support around here as long as equities don't go completely, tits up. I mean, bot, flat on its back. Tits up is another way to say it, but maybe not so eloquently. Anyway, as long as the stock market doesn't completely, fall through the floor, then we should find some support down here at 65, 64 cents. Now, obviously, if equities come unhinged, we're going to have a little problem with, the Kiwi and the Aussie. But I'm expecting them to find some support down here at, double top. We've reached the double top extension. Key fib levels are down below. So I'm thinking that we're going to start being supported down here, but the problem is that it's not. We're in a bearish trend, and that bearish trend is really not, stopping. And the risk is that we test the 65 cent level again. I mean, we're only 50 pips away. All we need right now is the U.S. equity markets to lose like 1% from here, and we should break 65 cents. Do you think that's impossible? Shoot, I think it's probable. So I'm a little nervous trying to. I'm not long the New Zealand dollar. I am against the pound, but I'm not. That's one I don't mind being long the Kiwi against, but I'm not buying the New Zealand dollar yet because I'm a little worried that stocks could come off. All right. So anyway, 65 cents is going to be key support. And I'm going to remove this trend line really quick just to get it out of the way. And I think this is something we need to pay attention to, something like looks like this. Spike high to low to highs. So 66.40 resistance 65 cents is support. If you want to play it on the long side, wait till we get to 65 cents. Buy it, put in a 30 pip stop. You know, if you want to short it, wait till it gets to 66.40. It's probably a better short up there. All right, so 6640, then obviously 0.6500, and that is a pretty critical level of support. Bearish. Let's go over to the Aussie. Obviously, the Aussie is getting hit even worse than the Kiwi. A lot of people trying to, thinking the Aussie's trying to bottom here. The move out of China overnight really, in my opinion, highlights the very big issues that China is facing moving forward. Okay, really highlights how big of trouble China is, and we have to respect that. Okay, we do. All right, support for the Aussie is well, right now it's at 73 cents, and if we break through that, then the next support doesn't come until 72.20, but 72.40 right here, or 72.60. So I'm going to write them down, both of them. Support point 7260, 0.7300, and then resistance obviously now is 74. 74.35. But I mean, even if we, but at this point in time, even if we get back to 74 cents, people like me, I would actually, if we made it back to 74 cents, I would actually use that as an opportunity to be on the short side of the Aussie if we did this. Me personally, okay. So 0.7400, 0.7435. Okay, we are in a bearish trend. Okay, let's go over to the dollar index. Okay, so here's the dollar index. Let's go over to the daily chart. Zoom in a little. Okay, so here's the dollar index, and you probably see the support. Oops. Support in the dollar, probably pretty close to where we're at right now. And in fact, let's go over to that 618 at 97 is really coming into play. So support in the dollar index is at 97, and resistance obviously at 98.30. We are definitely in a range. The euro just spiked up to 110.50, by the way. All right, let's go to the remember, I'm going to sell a little bit more. We get to 110.70. Here's the peso. See if there's anything going on with the peso. Just a really tight consolidation here. Nothing yet, but man, that peso is winding up. Here's the Norwegian krona. That Norwegian krona isn't doing a whole lot. take a look at the Swedish krona. Swedish krona is coming under a little bit of pressure. Hey, you know, we got a what might be just a little heads up here. This is something for you guys that can trade it. Might be getting a little head and shoulder pattern here. We break this this neckline and this trend line right through here. That might open up some downside. We talked about the support as being key support today, or yesterday. Um, it's like pretty critical support we're coming into. Just keep an eye on the Swedish krona here. But you know, the question is the euro going to turn? You know, when it gets to 110, 70, because I think it will. Um, but if it doesn't, and the euro like gets above 111, just keep in mind the U.S. dollar Swedish krona is going to be a really nice setup for a short for those of you that can trade it. All right, so here's your bias chart. I'm going to take a couple quick questions.